Good morning and welcome to our 290th weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. And so the way this call works is this is like an AMA on Reddit. You can ask me anything. You can ask me investing questions, career questions, startup questions, personal growth questions, any questions you want to. And my humble goal is to help you take your career, your portfolio, etc., to the next level. One quick housekeeping announcement before we begin. Today is the last webcast I'm going to have for the next couple of weeks. So the next webcast will be on October 17th. And the reason is because I'm going to Kenya to build another school. Now, as many of you know, I built my first school in Rwanda. We completed it last year with a student that I met on Udemy, and his name was Vital. And the next school we're building is with a student of mine I also met on Udemy named Marin Koros. And we're building a school for girls about a 6-hour drive away from the Nairobi airport. And so what I will do, of course, is I'll take lots of videos to be able to share with you. Now, Mark Twain had this great quote. He said, the two most important days in your life are number one, the day you're born, and number two, the day you find out why. And so my purpose, my passion, my raison d'être is to help you all find your purpose, your passion. What were you born to do career-wise? What do you love doing? And so for me, my purpose, my passion is to make the world a better place by leveraging education and building lots of schools overseas. And as Nelson Mandela said, education is the most powerful weapon that we can use to change the world. And I really believe that. All right, so let me get through the questions here. And I got this wonderful jacket here from Greg Brown, who's the CEO of Udemy, a great partner of mine. I love that company. It really is a world beater. It's the only ed tech company on the planet that matters, in my humble opinion. Yeah. All right. First up, we got Prashant, who wrote, "Hi, Chris. Best wishes for you in your new school in Kenya." Thank you very much. Appreciate it. And then you wrote, any business site in the United States to connect buyers into B2B segments. Yeah. I don't really know of any great platform, so to speak, but what I would do is I would go to Salesforce and check out their platform. There's a lot of apps that plug into their platform as well. Aside from that, I don't have a great answer for you. Sorry. All right. But I do get a lot of questions about what AI apps to use from a B2B perspective. And whenever you're looking into a new technology to use to take your career or company to the next level, you always want to look at what the top venture capital firms are investing in or recommending or write about. With that in mind, let's go together to the website of the number one venture capital firm in history called Sequoia. And 5% of Sequoia's investments are unicorns, meaning billion-dollar companies. Now, just to put that into perspective, the top 10 companies in the world when it comes to unicorns in VC, the top 10 VC firms only have 1% of their investments as unicorns. We've got 5% here for Sequoia. Sequoia backed Google and all the great tech companies you know of. So if you go to Sequoia's website, you can search for what's called Generative AI Act 2. And they update this every now and then. And it's a work in progress. Actually, it's version 3 now. And so here's all the AI products that you can consider using to help you from a consumer perspective. And down here are all the enterprise products you can look at. So per your question, Prashant, about B2B platforms, you might find one right here. And for those of you that are very technical, you can also scroll down to see all the technical tools from an infrastructure stack perspective that Sequoia recommends looking at if you want to scale your business using AI. Look at that hugging face logo, adorable. All right, let me get back to big Chris mode and get to your next questions. All right, so next up, Prashant wrote, thank you for guiding me and identifying the gaps in my business approach. You're most welcome. You're most welcome. Yeah. Next up, Shahar wrote, hey, Chris, good morning. Great to see you always. Omar, hello. Great to see you. Mina, great to see you. Good morning as well to you. Moving on to Danny. Danny, first time I've seen you on the call. I hope you join us again. Danny wrote, you give a ton of great advice and likely been giving a ton of great advice in your career. Thank you. When one teaches to learn. I'm wondering what has been the worst advice you were ever given that has held you back in some way? Yeah. probably to get a job for the sole purpose of chasing money. If you chase money, you lose your dreams and your money. But if you chase your dreams and you just don't care what people think of you or your career decisions, you chase your dreams and you fail over and over again and you just don't care, something beautiful happens. Your dreams come true and the money follows accidentally. It always does. It always does. And so, for the first couple of decades of my life, I think I was pretty insecure. I was chasing money. I humbly did okay. I went to Wall Street, worked at Goldman Sachs for 5 years. Then I worked at a big hedge fund called Citadel. And my happiest day was always the first day of work. And then it went downhill. And, those are great companies. And I thought, is there something wrong with me? Am I clinically depressed? So I switched out of the hedge fund industry, did venture capital. I was a bit happier, but something was missing. And I started off this webcast by saying that great quote from Mark Twain, which is the 2 most important days in your life are number 1, the day you're born, and number 2, the day you find out why. And then I met Tony Robbins. And Tony was looking to invest in one of my portfolio companies when I worked in venture capital. And he convinced me to chase my passion, which is teaching, and forget about all that other VC and finance stuff. And so my humble goal is to help you all find your purpose and your passion. And I want you all to think of me as your humble waiter. And this is the restaurant where I proposed to my wife, Christine. She said yes. More importantly, my goal, or equally as importantly, my goal is to be your waiter, all of you. What do I mean by that? Well, I want to expose you to tons of different types of jobs. And just like when you go to a restaurant, you look at the whole menu, but you only order 1 or 2 things. And so my humble goal, my purpose, is to expose you to tons of different types of careers so that you can find your passion and your purpose and your raison d'etre, etc. All right. All right, next up, Mina wrote, God bless you abundantly, Chris. Thank you, and God bless you much more. I'm also so excited for you building your school for girls in Kenya and more to come. Thank you. Appreciate that. And my humble goal is to use the proceeds from what I do to build 1,000 schools in Africa in my lifetime. Now, just to put this into context, if I was a quota-carrying sales rep, I'd be fired over and over again. I set my goals really, really high. And James Cameron, a wonderful fellow Canadian director and the writer of Avatar, Titanic, etc., he said if you set your goals really high and you fail, you still fail above everyone else's expectations. And so that's my humble way of trying to put a dent in the universe. And we're now getting Starlink involved as well to provide, satellite access to internet in our schools in Africa. They're going to launch Starlink, which I have on my roof as well. This is Elon Musk's satellite company. They're going to launch Starlink in Rwanda any day now, and it's already available in Kenya. I think that education can fix all problems in the world. All right. Next up, we have Mark Satones. Great to see you, who always types in caps. And he reminds me of my grandfather, who would always type in caps to me, but he wasn't yelling at me. He was just typing. And I miss you, Grandpa. And I know you're partying up there with my little sister, Katie. I love you both. So Mark wrote, hey, brother, shout out to the global MBA gang. Great to see you. Can you explain borrowing against your own retirement versus taking the money out of retirement account? Thanks a billion. Yeah. So generally speaking, the way it works is you save a lot of money in a retirement savings account. In the United States, it's called a 401k or an IRA. Then what happens is that grows tax-free. And then you take it out many years from now and it's a lot bigger and you pay taxes based on that. You can also do a reverse mortgage. And what some people do is when they get a lot older, they slowly sell their house to a bank or another investor. Of course, they pay taxes on it at that point in time. And then they can live comfortably for the last couple decades of their lives. Now, a lot of my students will approach me and say, Chris, I want to make a lot of money so I can retire. That's the wrong approach. Please don't do that. Otherwise, there's no sense of purpose. And we can all reinvent ourselves at any age. And so I'm 52. And in the 1950s, the life expectancy globally was 26 years less than it is today. So I'm really 26, although I have the maturity of an 8-year-old. So you can all start over starting today. And if there's anybody out there in their 60s, 70s, 80s, 90s, higher even, that wants to reinvent themselves, please let me know, and I can humbly help you do so. You don't have to buy any of my courses or anything. What you can do is you can go to my website and get this book of mine for free called Networking to Get a Job, a Career, Start a Company, and so much more. So just go to harouneducation.com. On the bottom, download this book called Networking to Get Customers, a Job, or anything you want. Your network is your net worth. Relationships are always more important than product knowledge. We can reinvent ourselves and make a career change regardless of what age we are. And I'm here to help you do that. See me as your humble catalyst and your waiter here to serve you. All right. Next up, JK, good to see you as well. Hi. Omar then wrote this. I have a big problem, sure, which is I'm never consistent. Whenever I start a diet, I never continue it. Whenever I start a course, I can't complete it. I don't know how to be consistent, but I'm distracted. Yeah, I can humbly help you with that. So there's a great book I read about procrastinating. It's called How to Stop Procrastinating, but I never finished it. Sorry. That was awful dad humor. It took me 11 minutes to drop a bad joke. Sorry. In terms of consistency, what I recommend doing is do a daily schedule the night before, right? And I'll provide you with a free template in a second that'll help you do that. You can download from my website. And if you want to get something done, you give it to a busy person. You know, there's a reason why when we all go on vacation or we have like a month off, we just can't find time to exercise. So again, you want to get something done, give it to a busy person. So I recommend writing your schedule for tomorrow, today, every day. And I'll show you the template very quickly, and I'll give you a couple of other tips. You also need to set deadline dates for all your goals. And Tony Robbins once said that the reason that 95% of people give up on their New Year's resolutions by the third week of January is because they don't set a deadline date. So you got to set a deadline date, and you got to vocalize your goals as well and tell the world about it. Now, in terms of this daily schedule, just click here, go to harouneducation.com/schedule. Okay. Click here, and you can download this PowerPoint file that works in Google Slides. There's many file formats it works in. And what I'll do is I'll open this up. I've got a couple of screens here, so it's now opening on the wrong monitor, but I will share it with you in a second. That was me buying time. But what I want you to do is I want you to fill out this daily schedule system. I'm going to show you in a second. Every single night at 9 p.m. And let me show you how it works. All right. So you write, and you can customize this as well. It's just PowerPoint, right? Print this out every day. And you can change this as well if you want to. Okay. So what you do is you write down all your goals up here. And this is one from years ago for me. Then your to-dos, and then your entire schedule. You do this the night before, okay? And I recommend doing it by hand because I don't want you to copy and paste over and over again. Otherwise, you'll never remember it to follow through with it. And so what you do is you schedule everything, including, time for family, going to the gym, exercise. And then at the end of the day, you score yourself in the bottom right-hand corner. And this is very subjective, but maybe you take 10% off for each meeting you didn't go to, or take 20% off if you didn't say prayers, if that's important to you, and that's important to me, or take 15% off if you didn't exercise, etc. So do this the night before, and then score yourself and create tomorrow's schedule. Okay, I promise you this works incredibly well. Again, you can download this for free. I don't ask for your email or anything from harouneducation.com/schedule. All right. Yeah. And another reason why you might not be following through on completing all of your goals is because you're not passionate about what you're doing. So that begs the question, what are you passionate about? And what should you all do for your career or your next career? Well, the way to think about finding your passion or purpose or raison d'être in life is to do this. Imagine if I tell you, starting tomorrow, you have 30 days off. You cannot travel, you can't go to school, and you can't work. What are you going to do with your time? Whatever that is your passion, your purpose, your raison d'être, and you have to go after it, no matter what anybody says. Even if it's something fun like video games. And I know it sounds cray-cray, but my kids, they love this game Fortnite. And there's this guy named Ninja who makes millions of dollars teaching you how to play Fortnite online. And Ninja actually started his career on Udemy, teaching how to use Twitch. So everybody has something to teach. Teaching is the best side hustle ever. If you have questions on how to teach online on great platforms like Udemy, etc., please let me know. Quick side note, I'm not sponsored by Udemy. Udemy is an algorithm. So if my courses suck, they won't sell. And a lot of my courses are not that great. But I am sponsored by one company, which is SeekingAlpha. Yeah. All right. Maybe another reason, Omar, you're not getting stuff done is because you're burned out. And so I always recommend taking at least one day off a week. And, the basis of many great religions are 10 rules. And one of those rules is to take one day off a week. God created the world in 6 days, but rested on the seventh. Of course, he did not have to rest on the seventh, but he's just trying to prove a point to us that we will burn out if you don't take off one day a week. And I don't care how much work you have or deadlines, whatever, you have to do it. Because for me, I take Sunday off, I go to church, etc. If I don't take Sunday off, then on Monday I'm not productive. But if I do take Sunday off, and for a lot of my students, it's Sunday or Saturday or Friday. But if I do take Sunday off, then I'm way more productive on Monday. Be careful of burnout. Also, if there's a big mental health issue out there that a lot of people don't talk about, but I want to. So when you're burned out, a lot of times people will skip work when they're feeling physically ill. But when you're feeling mentally just not there, there's no shame in taking 1 or 2 days off a year to do that. And I promise you it'll help your career. So I'll give you an example. When I worked at Goldman Sachs, 1 or 2 days a year, I was kind of burned out and I didn't bother going to work. I called in sick because mentally I wasn't feeling great. And I'm glad I did that. And had I not done that, I might have gone into work and been grumpy or just not been myself or not focused. And it really would have hurt my ability to perform in the long run. So there's no shame in all of us taking off 1 or 2, sometimes more days a year when you're not physically sick, but just mentally not feeling great. Yeah. All right. All right, next up, Mark wrote, I love the vest, brother. Is it from the race team? Yeah, so Udemy sponsors McLaren. Udemy doesn't sponsor me, but I love the company. But they sponsor McLaren, yeah. All right, and then Danny wrote another question. Sure, as many as you want, please. Keep in mind, everybody, this is the last webcast for 2 weeks. I'll be in Kenya. Another question. I come from the automotive world. Okay. And our big convention is SEMA in Vegas. What are some big finance conventions and where, when do they happen? Yeah. So the finance conventions that occur are big investment banks like Goldman Sachs, Morgan Stanley, et cetera. They'll sponsor these conferences. And at these conferences, you'll see, the CEOs of all the top companies presenting, and you'll get to meet with other analysts that work at hedge funds and portfolio managers that work in mutual funds as well, et cetera. Now, you have to be in the industry to do that. But what you can do if you want to is if you're in school, you can go to on-campus recruiting. A lot of the big banks will come and recruit on campus. And even if you've already graduated, you can still go back to your school to attend those events. Just ask. Remember, closed mouths don't get fed. What you can also do, and this is a great tip on how to get a job or how to get a customer. You'll love this. So all big companies have annual shareholder meetings, and nobody goes to them. And the way it works is they're usually at a hotel or the corporate headquarters. They serve bad coffee, and they talk about how the year went and what they're looking to do next year. And there's a lot of C-level executives at that event, meaning CEO, CFO, et cetera, from the company. And there's some board members sometimes in the audience and some old investors like me. Anybody can go to these things. And so what I want you to do, if you want to work for a finance company, for example, or any company, and this works, I want you to go to those shareholder meetings. And then at the very end of the meeting, what I want you to do is I want you to go up and introduce yourself to the CEO. And the CEO will talk to you for a long time. And the reason is because the entire audience is watching. There's board members and investors in the audience and other executives at that company. So they want to set a good impression an example for everybody by talking to you. And they won't leave until you do and everybody else does. So what do you say? Well, you say something along the lines, if true, I'm very passionate about working at your company. Or if you're selling them a product, say I have a great product that can really grow your revenue or cut expenses. Is there anybody in your company I should talk to about this? And the CEO in front of everybody, one-on-one will tell you, sure, yeah, talk to Joanne Smith, who's our CMO, or Fred Johnson, who's our CTO, or whatever it is. Then what you do is you thank them. You connect with them on LinkedIn, of course. Then in LinkedIn, you send an email to Joanne Smith or whoever the CEO told you about, and you say this: hope all is well. I met with your CEO today, and he or she mentioned that I can reach out to you regarding X. Please let me know if you have time for a coffee. Thanks a lot, your future boss. No, thanks a lot, you're Chris. And they'll read that. Don't send emails. The reason I say don't send emails is because most emails we don't open anymore. But when it comes to in-mails on LinkedIn, every single person on this webcast has opened every in-mail you've ever received. So please do it. Ask and you'll receive. It's prophetic. It's been true since the beginning of time. That is how you get a job. That is how you get a customer, and you go right to the top as well, right? Stop wasting your time talking to entry-level executives if you want to sell something that a CEO has to decide on. Networking is everything. And every time you see a job opening online, you literally have a 1 in 250 chance of getting that job. So who gets that job? Well, it's ultimately the person that knows someone at the company. So network like crazy to meet 50 or 60, that's right, people at each company you want to work at. And when you bond with them, initially you talk about what you have in common. You might want to talk about your love of sports. You can go to their Twitter or X profile or Insta profile. If they follow baseball, you know what to talk about with them. Then they're very nicely going to say, why are we meeting? And at that point, you say something along the lines of, well, I'm really interested in working at your company. I'd love to ask you for some advice. Now, how do you get that first meeting? Well, you can read that book I mentioned earlier or take one of my courses where I teach you how to network on steroids. Yeah. Make sure you have a great LinkedIn profile as well. All right, let's move on now. Hey, Nelly, how are you? Andre from Florida, great to see you always. Elif, how are you? Great to see you. Awesome. And you're in the Middle East. That's right. We did a call not that long ago. Yeah. Excellent. And you're from Turkey as well. And that's where Udemy was founded, actually. Yeah. Next up, Peter wrote, I've been watching your options course part of the MBA. That's right. In FA 44, Finance and Accounting Semester 4, Class 4, we talk about options. Looks like a good risk-reward proposition. I know you recommend paper trading for 6 months, but how much should you have in reserve to start? Yeah. So a couple things. When you transact in options, if you want to do it after you practice for 6 months, I only recommend buying puts or buying calls. And the reason I say that is the most you can lose is what you paid to buy the put or buy the call. If you underwrite an option, meaning you sell it to other people, you're a market maker, which anybody can do, or a lot of people can do, you can lose an unlimited amount of money. Now, let me do a very, very quick teach-in on what options are and how they work. And we'll use Coca-Cola as an example. So say you own a ton of shares in Coca-Cola, and for some reason you don't want to sell them over the next year. You don't want to sell them maybe because you don't want to pay taxes. You want to hold it forever. But you're worried it might go down. What you can do is you can buy an insurance contract called a put, which is an option. And if Coke goes down, this goes up in price. If Coke goes up, great, you're making money because you own the stock, but this you lose money on. That's it. That's all it is. It's an insurance policy. So what's a call? Well, a call is the opposite of a put. It's easier to understand than a put. A call is you pay a small amount of money to make an educated bet, I guess, on a stock that's going to go up. And if the stock goes up, this goes up a lot. If the stock goes down, all you lose is this. Yeah. Now, when you underwrite options, be careful. I don't want you to do it, meaning sell them, because you can get randomly assigned, as I talk about in FA 44, Finance and Accounting Semester 4, Class 4. And what that means is you can literally lose more than 10 times what you invested. Yeah. And by the way, I just made an update to that course. There's a new options dashboard you can download, version 3.0. Thank you. And you'll see it in the course. All right. And then Omar, who asked earlier about procrastinating, etc., wrote, thank you so much, Chris. That's the best advice I've ever been given, and I'll start implementing it today. Awesome. I love you. I hope it works out. And keep me up to date also on how it works. Now, for that daily schedule I provided you with earlier, I recommend doing it every day except for the 1 day per week you take off. Yeah, otherwise you'll burn out. And I challenge you, and I say this with love in my heart, to see if you can do it 50 days in a row, not including that 1 day off per week. And then Dirt Hero 75 wrote, I love your classes on Udemy. Thank you. Appreciate it. All right. Zane wrote, hi, sir. Chris, please. Hope you're doing well. I'm trying to learn stocks and cryptocurrency, but what should I learn first? Yeah, definitely start with stocks first, because the problem with cryptocurrencies is they're not regulated. They're kind of regulated by the laws of mathematics if there's a limit on supply of the underlying cryptos when you mine them. And so with stocks, they are regulated by governments. And so what you can always do is you can read, by law, companies have to file financial reports that you can read about. So start with stocks first. So a great way to start, if you're a beginner investor, I would start using Yahoo Finance. But as you become a bit more advanced, what I recommend doing is you can check out SeekingAlpha. Again, I am sponsored by SeekingAlpha. If you want a discount to join their program or one of their services, just you'll see it in the description of this video. But what you can do is you can do research on any company. So here's Coca-Cola we talked about before, right? And so you can look here at SEC filings, and this means Securities and Exchange filings. And this is how you do research. You can also listen to earnings calls as well, read the transcripts of the earnings calls, look at press releases here, etc. And this will help you to do investment research on the company as well. Now, I believe in SeekingAlpha. It's the first sponsorship I've ever taken. I've had over 500 companies reach out to me over the years about a sponsorship. This is the first one I've taken. And the reason I've taken is because I use the product and I love it. Yeah. All right. And if you want me to give you a teach-in right now or teach you about how to value stocks or anything with respect to stocks, let me know. Last thing I'll say on that topic is before you invest in a stock, do your own research. Don't ever rely on me or anybody else to tell you what to buy. And when you buy the stock, I want you to tell yourself like what Warren Buffett does, which is this. Okay, I'm going to invest in Coke or this stock, whatever it is. And I'm assuming that after I buy it, I cannot sell it for 10 years because the market will be closed. Now, of course, Mr. Buffett knows the market won't be closed, but I want to impress upon you the fact that you've got to be long-term focused. In fact, with Coca-Cola, if you bought it on day one of the IPO many, many years ago, you would be down 50% 1 year later, but you made a killing in the long run. The longer the view, the wiser the intention. Always be long-term focused. And don't get seduced into day trading. That it's not a moneymaker at all. All right. All right, next up, Sunny wrote, hey, Chris, good morning. Good morning. What percent of income do you recommend putting in the 401ks? Yeah, every penny you can. So I think the maximum is around $23,000. And what I want you to do is to have it automatically taken out of your paycheck every 2 weeks so it's out of sight, out of mind, if you can do it. Now, we can't max out our retirement contribution every single year, but try your best to do it and certainly live below your means. Yeah, max that out. And then when you have kids, you can max out something similar to a 401k, which is an educational savings program where you get even better tax benefits. With a 401k, you invest money tax-free, it grows, then you take it out, you pay taxes then. With an educational savings account, it's even better because if you take that money out when you want to pay for your kids' university, if they want to go, that's tax-free. Yeah. And the sooner you start, the better. Yeah. All right. And then you wrote here, how much of our investment portfolio should be allocated towards ETFs versus individual stocks? Yeah, great question. So what I would say is I don't want any stock in your portfolio to be more than 5% of your portfolio. And that means a minimum of 20 stocks. And the reason I say that is, you have a fiduciary duty to yourself and your family to preserve capital and grow capital. And you don't want to put all your eggs in one basket. So make sure you're diversified. Also, diversify amongst sectors. So in each sector, don't have more than 20% of your investments. So don't have more than 20% in tech or 20% in retail, healthcare, financial services, etc. Yeah. Now, if you don't have time to do investment research using the tools and templates I provide you in my MBA program, you can always buy ETFs. And if you're going to buy ETFs, I try not to make any ETF more than, say, 10% of your portfolio, and make sure they're liquid as well. And a great way to do research on ETFs is two ways. You can either use SeekingAlpha, which has actually over 5,000 or 4,000 ETFs you can do research on if I get rid of all these filters here. And what you can also do, there we go, is you can go to a free website called etfdb.com. That's etfdatabase.com. And you can look at 4,000 or 5,000 ETFs here as well. Now, when you look at ETFs, and let me go to Yahoo Finance, which is free. But when you look at ETFs, I always want you to look at the expense fee as well as the liquidity. Let me kick it off with the expense fee. So this is an ETF for the S&P 500, which I own. And this is where I usually put money when I'm not sure where to put it. So with this ETF, you're going to only pay 3 pennies for every $100 you invest per year. Don't invest in mutual funds because mutual funds are a scam, and the hidden fees can be 500% instead of 0.03%. The second thing I always look at is the average daily volume. And what you want to do is you want to make sure you never buy more than 10% in a position in an ETF you want to invest in, meaning 10% of the average daily volume. Now, of course, this thing is very liquid. You don't have issues with the VU here, but some ETFs are very illiquid. And as we learned in the fall of 2008, illiquid stocks own you rather than vice versa in a down market. All right. All right. Okay, great. Next up, we have Luigi. How are you? Good morning. And I'm smiling and I'm sad too because I'm thinking of my little sister, Katie, who passed away recently. I used to play Nintendo with her, and I was always Mario and she was Luigi. Or I'd give her, I feel so bad, but Katie, I'm sorry. That controller I gave you when we were playing Mario Brothers together was never attached to the Nintendo. Yeah. All right. Luigi wrote, hey, Chris, good morning. 2 questions. Where'd you get your vest? You look great. Thank you. Yeah, so I got this. I met with Greg Brown, the CEO of Udemy, and he had it, and I said, oh my God, it looks so amazing. And he said, well, let me send you one, and he was nice enough to send it. Yeah, good guy. Okay. And then you wrote, can you explain why equities in China are up in the past 2 days? Thank you. Yeah. So China just announced a massive restructuring program to stimulate the economy, where growth has slowed to the low to mid single digits GDP-wise. So they're trying to reinvigorate growth. And that's why stocks have gone up a lot in China. It's kind of like in the United States from a fiscal policy perspective, when the government creates stimulus programs. You know, where they give a lot of people money, or they do a lot of infrastructure build-outs, like building roads, bridges, et cetera, which helps the economy. And the stimulus program, the younger generation calls it the Steal From Us program. Yeah. Yeah. All right. All right, next up, Greg wrote, hi, Chris, I'm watching you from Nairobi, Kenya. Excellent. Thank you. Thank you. And I'm learning a little bit of Swahili through Marin. You wrote, I just wanted to thank you for your Udemy course called Resume LinkedIn course back in 2022. And I managed to transition to a great job that doubled my income. Excellent. Very happy for you. It works, right? It works. Yeah. Okay. Next up, Amina wrote, yes, Chris, can you do a teach-in on stocks? Yeah, sure. Happy to do it. So whenever you invest in stocks, number one, don't take advice from anybody, okay, including me. Always do your own research. And what I'm going to do is I'm going to open up Excel Hell, and I'm going to show you a great template that you can use to look at every aspect of a company and decide what it's worth before you invest. So give me 1 second here. It's taking a second to get here. I'm going to load this on my other screen up here. Look at me buying time. Okay, here we go. Okay, great. Yeah. So I'm going to open up my investment research dashboard that is exclusively available to my MBA degree program students. So whenever you analyze stocks, you want to look at qualitative research metrics, quantitative, as well as financial research metrics. And I've created this here. There's 100 steps in this research dashboard for you, for my students. And on every tab, there's a link that will explain how to complete each tab, right? And it's a YouTube video. And so on the 100 steps here, there's 730 questions you have to answer. And that will get populated into a one-page report here that you can print out. And this is just dummy data here that looks at fundamentals, valuation, and technical analysis. What also comes out of this is a 150-page detailed report and also a dashboard based on whatever information you entered into here. So we always start with the management team. Okay, so what is a company? Well, a company is people. And so you only want to invest in great managers. And so we do a deep dive on that here, and they don't teach you this in business school, which is unfortunate. The jockey is always more important than the horse. And then we do a bigger qualitative analysis by analyzing, their target market, the competition, etc. And then eventually a quantitative analysis without data. All you have is an opinion and not a thesis. You look at the total addressable market, the market growth, etc. And then the most important stuff is your financial statements that I teach you from scratch in my MBA program. And here you forecast revenue, the income statement, the balance sheet, cash flow statement, and then you value the company using three different methodologies: price to earnings, price to revenue, DCF. Why three methodologies? Well, the reason is because one of your valuation methodologies is going to be off. We don't know which one. And then you take an average of all three. Now, and this is how investment bankers do it as well. Whenever they do an IPO, they always have their equity capital markets team talk about valuing the stock three different ways. Now, when it comes to valuing stocks and any ratio you see for the rest of your life, I'm going to make it fun and easy for you to understand. So I always want you to assume the denominator is a number one in fractions. I'll give you an example. So if a company has a price to earnings of 10 times, that means on the numerator there's 10, on the denominator there's 1 earnings per share. And what that means, a PE of 10, is for every $1 in earnings per share, investors are paying 10 times that $1 in earnings. And the faster a company grows, the more investors will pay for that $1 in earnings. And so sometimes you'll see a company trade at a price earnings multiple of 100 times. And what that means usually is, well, right now it looks expensive because for every $1 in earnings per share on the denominator, investors are paying $100. But the bigger picture is the smart investors are probably valuing that company, like I humbly do, based on your earnings estimates in 5 or 10 years. And so when I used to work in the hedge fund industry, I owned LinkedIn when it was a publicly traded company. And I also owned Amazon. And my peers would always tell me, Chris, you're crazy. You're crazy to own Amazon as well as LinkedIn because they trade at nosebleed PEs of over 100 times. And I would say, no. They're cheap. They're trading at 3 or 4 times my earnings estimates in 5 or 10 years. And so you have to forecast your financial statements and value companies based on your earnings estimates many years into the future. And that way you can be a long-term investor as well. So what exact PE should you assign to a stock? Well, a really simplistic way to think about it is this. The S&P 500, which is a collection of 500 stocks that represents the U.S. economy, the S&P 500 historically trades at around 15 times earnings, right? That means a PE of 15 is for every $1 in earnings per share, investors are paying 15 times that $1. Now, the average company in the S&P 500, stick with me on this, you'll have a big aha moment in a second. The average company in the S&P 500 also has earnings growing at about 15% over time. So if we take a PE of 15 divided by 15%, that's 1. Okay, just accept that for a second. So if there's a company in the S&P 500 that has earnings growing at faster than 15%, say it's 20%, then investors are probably going to pay 20 times that $1 earnings per share. And that's referred to as a price earnings to growth rate. So that's why some stocks are more expensive than other ones. Now, quite often, a lot of people will tell me, Chris, that's great, but how do I value a company that's not profitable? Well, there's a couple of ways to do it. It's not profitable yet. So you can either look at your earnings estimates in 5 or 10 years and come up with a PE-based target price that way. Or what you can do is you can look at what's called a price to revenue multiple, which is similar to price to earnings, except it's price divided by revenue. So let's talk about that one methodology thing again. So if a company has a price to revenue of 20 times, that means for every $1 in revenue, and revenue and sales is the same thing, for every $1 in revenue on the denominator, investors are paying 20 times that $1 in revenue. And obviously, if the company has revenue growing very quickly and investors think it'll be profitable in the long run, people will pay a lot more for that price to revenue. And it's all relative valuation-wise when it comes to price to revenue. I'll give you an example. During the summer of 2012, I participated in 3 software IPOs, all kind of in the same sector. ServiceNow, ticker NOW. I met with Fred Luddy and Frank Slootman in my office, as well as Splunk, ticker SPLK, which Cisco bought last fall. I met with Godfrey Sullivan in my office. And then Workday, ticker WDAY, and I met with Anil Bousri, the CEO and co-founder, along with David Duffield, at a group event, not in my office. Now, those 3 stocks at that point in time, in the summer of 2012, they really weren't that profitable. So what do we value them at? Well, the going rate at that point in time for those 3 stocks was about 20 times revenue. So that's what we value those companies at. High growth, cloud-based software companies were valued at 20 times revenue at that point in time. I would always look at price to earnings first, price to revenue second, and a distant third, something called discounted cash flow, which I'm happy to go into detail if you want me to. Okay. Yeah, and Mina and everybody else in the call, if you have follow-up questions about how to do investment research on stocks or any questions about what I just mentioned, please let me know. And thank you as always. Okay, Manas, how are you? Manas is from India. He wrote, good morning, my dear mentor. You look like a doctor, a radiologist today. Thank you. That would make my dad and my brother proud. My dad and my brother are both radiologists, meaning they fix radios. Yeah. I got to go off script and tell you a story. Okay. When I was a little kid, and this is the epitome of dad humor, I love this stuff. When I was a little kid, my dad started his company. It was called GAM X-Ray, which he sold recently. And it was 1976, I think, yeah. And he came, and I am that old. He came home one day, and he told me this story that had me crying laughing. And he said this. He said, Chich, which was my nickname growing up, he said, I had this older lady come in for a chest X-ray today, and she didn't really speak English. And so she's lying down on the X-ray machine, and I told her to hold her breath so they can take the X-ray. Hold your breath. And so she went like this. Sorry. That actually happened. I thought it was the funniest thing. All right. All right, next up, Joshua. Joshua wrote, hello, Chris. Hope you're doing well. Likewise. Do you have advice on making a better resume? Yeah, so 3 sections of a resume. You either start with experience or education, and then you've got just personal achievements, etc. So you start with experience if you work for a long time. If you haven't worked for a long time, you start with education. Yeah, and I recommend using the Harvard Business School format, the HBS format. Keep it to 1 page. You can search online for the HBS format, and I teach you how to do this in my MBA degree program as well. Why the HBS format? Because a lot of senior executives, meaning older people, they're familiar with that format as well. So just use it. It's simple. Yeah, less is more. Never have more than 1 page on a resume either, please. Yeah. Never make it 2 pages either. Yeah. All right. Next up, we have Nellie, who wrote, what daily habits have contributed most to your success? Well, I drink a whole thing of vodka every day before I go live on this call because it makes me more confident and stuff. No, I'm just kidding. No. I don't drink anymore. Look at this. I have a drinking problem. I don't drink anymore, but I don't drink any less. I drink lots of water, and you can get this from Amazon. Okay, and this basically has, I don't know, time on the side here, so I know if I'm up to date and supposed to be drinking a certain amount each day. The reality is I finish 2/3 of this every day, not the entire thing. So I would say water is a big one. Another one for me that's humbly helped me a lot is I get a lot of exercise in. I exercise like crazy. A lot of people don't know that. So what I do is I get 20 to 30,000 steps a day in my office on a treadmill that costs literally 140 bucks. And this thing is amazing. A lot of my students have bought it as well. And I've got one of those cray desks that goes up and down as well. And the reason I do this, the reason I exercise all day, is because I realized when I was younger, when I was in school, that the first hour of studying every day was the most productive. And then at night I'd try to cram for 10 hours and I get nothing done. And so I realized that you can trick your brain into thinking you just got up by continuously feeding it oxygen. And so every hour of every day is like 10 hours every day. So you work a 10-hour day, that's 100 hours. And my mom told me a million times not to exaggerate, but I think you understand what I'm saying. So this helps a lot. And Steve Jobs, what he used to do with his best friend Larry Ellison is he would go for a walk every day at 1 p.m. and sometimes by himself as well. And that's where he would come up with groundbreaking ideas because he's kind of creating serotonin in his mind and feeding his mind as well. If you treat this right, this works gooder. Yeah, so that helps a lot. Another thing I do is since 2015, the first thing I consume every morning is bulletproof coffee. Please do your research on this first. Talk to a doctor before you do this. But what people have been doing for hundreds of years is they've been putting a tablespoon of grass-fed butter in their coffee or their tea. And it gives you this incredible ability to have limitless energy and cognitive abilities like Bradley Cooper in that movie Limitless. And what's also in here is something called MCT oil, right? So this is coffee, a little MCT oil. It's like coconut oil. If you do it, be careful. Only do a tiny drop every day initially and then work your way up to a tablespoon. Otherwise, you will get stomach aches. So this is what I first consume. The problem with doing this, though, is if this is the first thing you consume every day, it does curb your appetite. So sometimes you have to kind of force yourself to eat a bit, which is not a bad thing if you're trying to lose weight. What I also do diet-wise, because you are what you eat, and with organic food now, people are saying you are what you eat. But what I do is every Sunday, I create 7 of these things. And this is greatest hits of every antioxidant you can possibly imagine. So there's 7 bushels of kale in these 7 drinks I make every week that are in my fridge. What's also in this are blueberries, raw ginger root ground up. I juice all this stuff. I also put in strawberries. I put in acai. I put in fish oil. It's called Super EFA. I also put in whey protein, mushroom extract for cognitive abilities, and a couple of other things as well. And I only consume this when I'm hungry throughout the day, right? And so you'll notice that a lot of chefs are not overweight, right? It's a misconception. And the reason why a lot of chefs are not overweight is because they're standing all day. And by the way, I don't sit in my office ever. Chefs stand all day, and they don't have time to sit down and eat. But as they're chopping stuff, they'll take samples, eat a little bit every now and then. So it's small meals throughout the day. And this works humbly for me really well. Another success factor, I guess, so to speak, and I made a lot of mistakes too, is follow your passion. If you do what you love and what you were meant to do, you'll be successful at it and you'll enjoy it. Don't you want to be happy? Yeah. Yeah. Okay. Okay, next up, the question is from Manas, who wrote, what language did you use to code while you're in your 20s, in your first job? Yeah, so I worked at Accenture, great company. So I started out first COBOL. I am that old. It's computer-oriented business something language, mainframe stuff. Then I did C++. Then I went on to Java. When Gosling created Java, Canadian, back in 95, Accenture sent me to Sun Microsystems to learn the coding language. And then I started Accenture's Internet R&D Center, actually, with a couple of colleagues. Basic HTML back then, Python I learned eventually. I've done it all. But you have to thoroughly enjoy it. Otherwise, you're not going to be good at it. And when you learn programming, and this is something I teach, and my MBA students get it for free, my Python course. When you use programming, there's something called object-oriented coding. And I visualize all this stuff to make it fun and easy to learn as well. And for those of you not sure if you want to learn coding, what I recommend doing is start with Excel. And I have a course on this as well. Because in Microsoft Excel, you can record what are called macros, which means Excel records what you're doing on the screen. So you might click on cell A1 and make it bold, underline, and do calculation. Then you click stop recording, and the code is created for you. And you can change around that code as well. That's called Visual Basic for applications. And if you enjoy doing that, and I love it, I still do it now, then you might want to move on to Python as well. Now, Jensen Huang, who's the brilliant founder and CEO of NVIDIA, he said something very controversial about programming. He said, don't study it in university. I was shocked. And the reason he said this or implied this is because he said that AI is perfect to do all that stuff. And he said, instead of doing that in university, students should study liberal arts. I was shocked when he said that. And his thesis is this: liberal arts teaches you how to think creatively, so you can be more creative. AI can do the repetitive, boring stuff, but you need to be creative. And Steve Jobs used to always say that Apple lives at the intersection of technology and the liberal arts. So liberal arts is important. And Jensen Huang said this, and this is controversial, this is his opinion. He said that he thinks in the next couple of decades, the American educational system is going to surpass the rest of the world, because in the United States, a lot of times when you go to university, you do not declare your major until your second or third year. So you do liberal arts initially. Whereas in other countries, you don't really do liberal arts as much. You kind of learn a skill right away, which is how I was taught. Yeah. Okay. Next question. Rohit wrote, I hope you're all likewise. Is the CFA required to be successful in the hedge fund industry? Absolutely not. Absolutely not. But I will say the CFA is better than an MBA when it comes to learning finance. Yeah. And a CFA, it stands for Certified Financial Analyst designation. It takes 3 years to get, and all you do is you write one exam, 3 nights over 3 years. And they give you a lot of books to study from. Don't buy the books, though. You can buy a shorter summarized version of the books called Schweizer. You can get it on eBay, and I go into more detail on that if you want me to. Yeah. And Christopher wrote, RIP to your sister. Thank you. Appreciate it. Thanks. Okay. Next up, Rohit wrote, how is the job market in the United States for foreigners? Well, generally speaking, the job market is actually getting a lot better. Unemployment is, low to mid single digits, right? So at this point in the economic cycle, I think we're doing pretty darn well. In terms of visas, I haven't seen a big increase in visas over the past couple of years under the Biden administration, but I would say it's healthy in general. And here in the Bay Area where I live, 50% of all engineers and founders were born overseas. Yeah. But you don't have to be in the United States. You can be anywhere in the world to start any company. Everything is virtual. I'm in the US right now, but I could be in Timbuktu. I don't even know what that means. Yeah. Okay. All right. And if anybody lives in a certain country, and if your goal is to move to another country, I'll give you the best way to do it. So I'll give you an example with the United States, just because it's what I know. Let's say that you live in India, for example, and your goal is to live in the United States. What I recommend doing is joining an American company in India and doing really, really well over 10 to 15 years. And eventually you'll get promoted to the mothership, the headquarters. So for example, let's say you work at Microsoft in India. Work really hard, do exceptionally well, get promoted multiple times, and then after 10 or 15 years, they will probably ask you to relocate to their headquarters in Redmond, Washington State, in the Pacific Northwest of the United States. It's kind of a long-term strategy, but I think it works exceptionally well. Yeah. And these big companies, they have armies of lawyers. Yeah. And that's what happened with me, with Goldman Sachs. They got me a visa to come to the States from Canada. Yeah. All right. And then the question is, are there good amounts of openings or vacancies for front-end roles in investment, meaning, I guess, being an analyst or a portfolio manager? They're usually not advertised, especially at hedge funds, which don't advertise. And so what you have to do is you have to network like crazy using the methodologies I teach in my MBA degree program. Yeah. All right. All right. And then next up, Yiping wrote, hey, Chris, can you share your experience/views on how to tell or gauge an interview regarding his or her expertise and skill set levels, particularly whether he or she is bluffing or having real stuff? Yeah. So I worked at a very big hedge fund that hired 25-year ex-FBI and CIA veterans to teach us how to tell if somebody is lying. And the reason they taught us this was so that we could tell if a CEO is lying about how business is. And there's one rule. They said the way to tell if a CEO is lying is if he or she moves their lips. Okay, let me move on to the next question here. I'm just kidding. No. Here's the rules that these FBI and CIA veterans taught me and my team and I. There's 4 rules to tell if somebody is lying. And what I'm about to tell you, it's more of an art than a science. And at least 2 or 3 of these 4 has to be valid for you to think maybe somebody is lying. But this works. Number 1, if they break eye contact when you ask them a question. Okay. Now, if they usually break eye contact, like my demeanor is I look down sometimes, just the way I am. If they usually break eye contact, you can't use that. But if they never break eye contact and they answer a question and they look away like this, they could be lying. The second way to tell if somebody is lying, according to FBI and CIA veterans, is if somebody rambles on and on and on and on to a simple question. You know, like asking a kid, did you take that cookie from the cookie jar? No, how could I do that? I mean, I'd have to get that ladder here and over there, and I tried picking it up last night. It's really heavy, but I could still lift it over there. Let me wipe off the crumbs on my face, but I did not take that cookie. Okay. The third way, or threeth, as my son Andrew used to say, to tell if somebody is lying, is if they touch their face. Okay. And if they normally touch their face, that's cool. It's just, it is what it is. But if they usually don't touch their face and they do something like this, it could imply that they're lying. Okay, it's more of an art than a science. And the fourth way to tell if somebody is potentially lying is if they start shaking their foot a bit, okay, or their hand or something, usually their foot. And that's what a lie detector test for, like you see with Meet the Parents with Robert De Niro and Ben Stiller. Now, be careful with the shaking the foot thing, because if somebody has too much coffee, they could be kind of jittery that way. But the bottom line message here is that of those 4 criteria, make sure that 2 or 3 or 4 of them occur for you to maybe think with a higher degree of probability that somebody is lying. Yeah. Also, go with your gut. And we've all been burned in business and in personal relationships. You know, your gut sometimes will tell you, oh, I don't know if I trust this dude. And then you end up trusting them. And then you get screwed over in a relationship, personal relationship or business relationship. Go with your gut. You know, fool me once, shame on you. Fool me twice, shame on me. Yeah. All right. Next up, we got Yiping. Hey, Yiping, who wrote, hey, Chris, can you share your experience and views? Oops, that's the same question. I just had a senior moment there, guys. The older I get, the better I was. Yeah. All right, moving on to Omar, who wrote, is day trading real? It exists. A lot of people do it for a career, but nobody makes money. Okay. And there's a reason why we don't know the names of successful day traders over the years, because they don't exist. It's like going to a casino. And the worst thing that can happen to somebody who might be a gambler is the first time they walk into a casino, they invest a little bit of money, whatever, they play roulette, whatever it is, and then they win. That's the worst thing that can happen, because you think it's repeatable, but it's not. It's a loser's bet. The same thing with day trading. If you trade a couple of times in your life and you've done well, you think it's repeatable, but it's not. And here's why. Each month has 20 weekdays, meaning 20 days the markets are open. And stocks go up and down in a short amount of time for random reasons that are outside of your control. For example, say I'm investing in AMD and it goes up a lot because there's a rumor that Qualcomm's going to buy Intel. That's random. I couldn't, and that is a real rumor. It's a real rumor. I couldn't forecast that. Or it could be the market could go up or down because of saber rattling between 2 superpowers, or something that happened geopolitically, a war somewhere in the world. Or there could be some economic data point that makes stocks go up or down. You can't forecast that stuff. You have to be long-term focused. And there's plenty of very successful investors that are long-term focused, even hedge funds. People think that hedge funds day trade. They don't. The successful ones are longer-term focused. They make 1 to 3 year bets at a minimum. And for more details on that, you can always search for Julian Robertson and Tiger and the Tiger Cub hedge funds. They're longer-term focused. Please, let me get down my hands and knees here. Please don't day trade. It will all end badly for you. I promise you. And think about all the stocks, and we've all made this cardinal sin of selling a stock we like because it's now cheaper. But think about that stock you once bought. We've all been there. Where it went down a bit on some random news event, and you got worried, so you sold it. And now it's like 10 times higher. Just take a look at the S&P 500 over time. Okay? It looks like this. And sometimes there'll be a little bit of a pullback, like, 9/11, 2008 crisis, COVID, and early 2020. But thinking longer term has always made you a lot more money. And that's why a lot of people do exceptionally well with their house or their apartment. Because they're long-term focused and you can't sell it, right? I mean, you can, but it's illiquid. It takes a while. And that's a good thing. So the bottom line is, the longer the view, the wiser the intention. Please do not day trade. It does not work. And I say it with love in my heart. Okay. Carolyn, how are you? Good to see you. Je veux faire la grasse matinée. And then we have Ya, who graduated from my gold program a year or two ago. Great to see you. Good morning to you as well. Moving on to Fu, who wrote, what are the pros and cons of ETFs? Yeah. So first of all, the pros. There's a lot of pros. So ETFs have very, very small fees. And the reason they have small fees is because they're usually based on an index. So for example, if you buy an ETF with a ticker SPY or VOO, they both represent the S&P 500. And you don't have to have somebody picking stocks. It just mirrors an index. Therefore, the fees are very, very low. And the fees with the SPY and the VOO are well under 0.1% versus mutual funds that compete with the S&P that might have fees, including fees of 300, 400, or 500 basis points, meaning 3, 4, or 5%. And these mutual funds cannot outperform ETFs. So mutual funds are a scam. Please be careful. Don't invest in mutual funds. Buy ETFs instead. In terms of a con of the ETF, if you're not investing with, a well-known brand like a Vanguard or Standard & Poor's or Schwab, you could get scammed. Also, a lot of ETFs aren't that liquid as well. We talked about that earlier today. The bottom line is, buy ETFs and not mutual funds, because mutual funds are a ripoff. Yeah. And they underperform S&Ps. Yeah. Next question is from Nelly, which is, what strategies can I use to manage fears and uncertainty about reinventing myself? Yeah. So we tend to over-worry. We tend to be fearful of stuff we can't control. And I didn't realize the stop sign was going to be this big when I got it from Amazon. But Dale Carnegie once said, our fatigue is often caused not by work, but by worry. And so we're scared of stuff that never happens. And Sir Winston Churchill said that I once met a man on his deathbed who talked about all the worries he had in his life, none of which came true. Things are never as bad as you think. Yeah. And we weren't meant to freak out like this and worry unless we're fighting for our lives. And so I was watching National Geographic. This will be a quick story. I was watching National Geographic years ago, and a gazelle was getting chased by a lion. And doctors put a bunch of sensors on the gazelle just to kind of see the analytics of the internals. And when the gazelle was running away from the lion, the gazelle's heart was obviously pumping very fast, and the gazelle's immune system shut down and reproduction system shut down. And a lot of people that worry too much in life get sick quickly because their immune system shuts down. And a lot of people that worry, and I have a lot of friends that have tried to conceive, and it's harder than you think. But they try to conceive, and it's so stressful because they can't get pregnant. And then they do something beautiful, like they adopt a baby. And then they're not worried anymore. and then they have a baby naturally right away. So just don't worry about all this stuff, please, and only focus on what you can control. And I'm a spiritual person, but I don't worry about work stuff because I always tell myself that God already knows what's going to happen. And that puts me at ease. It does. And you might have all had setbacks in your life, career-wise. They're not setbacks. They're stepping stones. And you won't get it today, but years from now you look back and say, I understand. I'm grateful to God that I had this setback or roadblock. Yeah. But just don't worry. Hakuna Matata. Yeah. Okay. All right. Next question is, can you talk about discounted cash flow? Sure. Yeah. So discounted cash flow is a way to value companies. I don't really like it, but I teach it because it's important to understand the future and present value of cash. But discounted cash flow basically means this. You calculate how much money a company is going to make every year into the future. And then you take that money and you discount it into today's terms. And what discount rate do you use? Well, it all depends on how risky the company is. We look at beta as well as part of that calculation. You also look at interest rates and other factors as well. Yeah. And it's basically the same thing as doing a net present value. Right. And so let me show you very, very quickly. All right. So instead of going through DCF from scratch, what I'll do is I'll just show you NPV. Let me go over here. All right. So I'm going to go and create a brand new Excel spreadsheet. Okay. So let's say that we make cash every year. Okay. Year 1, year 2, year 3, year 4, year 5. Okay. And the amount of cash we make, and let me make this a little bit bigger, get a little bit more real estate here. All right. Good. All right. So we got cash we make every year, and the years are on the top. So we make $100, $200, whatever. So what is this company worth? Well, if I take the sum of all of that cash there, it's worth $942. But you can't look at it that way because, you've got the time value of money, right? So for example, you have to discount this $222 into today's terms. And if that's hard to understand, think of it this way. If I give you $100 right now and I tell you the interest rate is 10%, how much are you going to have in a year? $110, right? So if I tell you next year, I'm going to give you $110 and I want you to discount it to today's terms using 10%, what's that worth? About $100. All right. So the sum of all these cash flows here is at 942, but we have to discount it using an interest rate. Okay, and so that's why when interest rates go up a lot, stocks go down in value because people don't take risks to invest in other assets. So what you do is you look at something called net present value. So you type in NPV, and then you have to type the rate, right? So let me just do 10%. Then you have to highlight all of the cash flows that you want to discount, and that's the value today. So if interest rates are 10%, then the value of all these cash flows here is not $942 right now, it's $694. Watch what happens when I cut interest rates. So I'm going to go from 10% to 5. Watch what happens to this number. So let me cut this to 5%. Whoops. Let me do that again, sorry. It goes up because you're not discounting as much. If I make it 0, if I don't discount it at all, it's the same amount. So the higher the discount rate, the lower the cash flows we worth today. That's one of the many reasons why people look at interest rates very closely, especially with a mortgage, which is kind of like this as well. And so for all of you that bought houses in the past 1 or 2 years, what I want you to do, please, is I want you to call your mortgage broker right now. And I want you to say, hey, I've noticed interest rates have started going down. I have this mortgage. If I refinance at the new interest rate, can I pay less per month? Right? And quite often they'll say yes, and you'll pay a small fee to do it, but it makes sense longer term. Yeah. And that's why with interest rates, everybody is so focused on what the Federal Reserve does with respect to mortgages, and the housing market as well. Yeah. All right. And if you want me to go into more detail in DCF, including the weighted average cost of capital and so much more, I'm happy to do so. But it's largely academic. Yeah. And I don't like DCF because there's so many unknown variables. For example, if I told you x plus 1 is 3, what is x? Well, it's 2. If I told you x plus 1 plus 3 plus gold drink is 72, what is x? No idea. Garbage in, garbage out. And that's what DCF does. There's too many unknown variables. All right. Hey, Blake, how are you? Okay. And then y'all wrote a safe trip to Kenya. Thank you. You wrote, I scheduled a call to build a school in Ghana. Is there anything I need to do to prepare for the call? Yeah. If it's with me, you don't need to schedule a call. I just join my weekly office hours instead, right? So what you can do is go to your calendar in the MBA program you purchased, and we can do a Zoom call today as part of the weekly office hours. Yeah, I'm here to help you always. And for all my silver students, it's every Thursday from 10 to 11 Pacific time, we do a 1-hour Zoom call. And then with my gold and platinum students, it's a 3-hour call. Yeah. Okay. All right. Yeah. Manas wrote, Mira Muradi, the CTO of OpenAI, left with 2 more executives. What is going on with them? Yeah. I don't know. I mean, I've seen lots of interviews with Sam Altman. I know what you know. And I know that the board tried to fire him a while back. And I know that Elon Musk, who was one of the original investors, is no longer an investor. My gut, and I don't know anything, okay? But my gut is, Sam Altman, he's a brilliant guy. And he's a heck of a salesperson. He was the president of Y Combinator, which is the best kind of feeder into the top venture capital firms. My gut is maybe he's a little bit more focused on profitability and a little bit less focused on privacy, security, and stuff. Of course, he cares about both. And you can read between the lines, but OpenAI it's kind of in the process of changing from a not-for-profit or charitable organization to a for-profit. Yeah. But I don't know. I don't know what I don't have any insider information on that. Okay, next up, Habib. Hey, Habib. Welcome to the house of Haroun Habibi. Habib wrote, how does the hedge fund employees get paid? How's the structure? Yeah. So the way that you make money in a hedge fund is 2 ways. So hedge funds get 2 fees. The first fee they get is a management fee. And then the second fee they get is a performance fee. And it's called usually 2 and 20. Let me explain this. So they get a 2% management fee every year. So if they manage $100, they get to keep $2 every year to pay for, office space, employees, etc. That's the management fee. The 20% is the incentive fee. And the way that works is if the fund makes money, they keep 20% of the profits. So if that $100 fund doubles in a year to $200, they made $100 in profit. So they get to keep $20. Yeah. And when you think of the funds that manage billions and billions of dollars, it's a hell of a lot of money. Yeah. Now, if they're ever down 1 year, they don't get paid the next year until they make that money back. And that's called a high water mark. Yeah. Okay. All right. Moving on to Luis, who wrote, hey, Chris, one question. I have a call option contract from Siri, at like the XM radio one, yeah. And they did a reverse split. If I exercise the options, will they split my stocks? Yeah. Yeah, so think about it in dollar terms. So whenever a company has a stock split, you're not getting more money, right? It's the same amount. The reason that companies split stocks is so that retail investors can buy a share. So if a stock is $200 per share and retail investors want to buy 1 share, it might be too expensive. So if they split 10 for 1, it's now $20 a share. More retail investors buy. So what happens in that case is the number of shares increased by 10x, but the value decreased by 90%. So it's a wash. The market cap is unchanged. Yeah. And if you ever have a specific question about an option that you own, I would call the firm that you traded that option through and explain to them what the question is. They'll explain it back, and it might be complicated, in which case you say this. I'm going to explain that back to you. Is that okay? And you tell me if that's right or wrong. Then you explain it again. And you say, is that right? If they say no, do it again. Rinse, rather repeat, because these calls are recorded for quality purposes. Yeah. Okay, moving on to Mensa Academy, who wrote, if I want to see my IP to company, design, and slogan, should I first apply for a trademark before I approach the company, or start discussions now without any formal protection of my idea? Yeah. You always want to talk to an intellectual property lawyer first. And what I've done and what you can do is you can always go to LegalZoom.com. And then at LegalZoom.com, you can hire an IP lawyer to file your trademark for you. Like, don't start a company. Don't get the web address and all that stuff until you see if you can own the trademark. Now, you can do this yourself. You can do research on this. I recommend hiring a lawyer, but I'll show you here real quick. All right, so sorry about all the screens here, guys. All right, so let's go to uspto.gov. This is the United States Patent and Trademark Office. And what you can do is you can search here for trademarks. Hold on a second. Search. I can't do it. It won't let me. Search. Yeah, it's not letting me do it, guys. Oh, here we go. Let me try again. Search system. All right. It's government website, right? So say you wanted to trademark something like Haroun, right? And this website actually locked up, guys. Yeah. So you would search, and you could try it yourself if you want to. It's not working here for me. The website crashed. But what you can do if you want to is you can type in whatever trademark it is you want to file to see if somebody has it. You can type my name, for example, Haroun. You'll see I own a ton of trademarks. And you can also do copyright. So trademark is the way to protect a brand. Okay. You can also protect, text or a video like I do. Or your code, and that's called copyright. And you go to copyright.gov, and you can search here as well if you want to. Yeah. All right, let me go back over here. But I recommend hiring a lawyer for that. Go to LegalZoom.com. Yeah. And if you're overseas and you don't have LegalZoom, you can always do what is the Canadian equivalent or whatever of LegalZoom.com. Yeah. All right. And then Yaw wrote, my friend is a clinical psychologist. She told me most of her clients who come in with depression and anxiety, it's due to living the life of other people's and expectations instead of their own. Yeah. A recipe for disaster is to, try to live your life to please others. And as Les Brown once said, somebody else's opinion of you does not have to become your reality. And I find that the most successful people I've ever met, right? And a lot of the best entrepreneurs, people that put their dent in the universe, they just don't care what people think of them. What a wonderful way to live. And I'm not saying be rude or disingenuous, but you got to live that way as well. You got to tell yourself, I don't care what people think of me. I don't care if people judge me because I'm a teacher. I don't care if people think I look ridiculous wearing this jacket, which I think is dope on a rope. I love it. I don't care if people find out, and this is true, that next year when GTA 6 comes out, I'm not holding a webcast or teaching any class for a month. I'm just going to play forever. You just got to tell yourself, I don't care. And so your homework, everybody's homework for today, and if you meet me in real life, I'm a tiny man, but your homework for today is this. I want you to write this down 10 times. Everybody. I don't care what people think of X, and then solve for X. For example, I don't care what people think of my career. Or I don't care if people find out that I still play video games as a 52-year-old man-child. Or I don't care if people tease me because my nose is large and it takes me 8 million years to put on this makeup every day. My nose gets so big, which is aerodynamic. Maybe I'm beautiful, maybe it's Maybelline. I don't care. And that's a subtle art of not giving a darn. And if you live your life that way, I promise you'll be much happier. And it's interesting because when I look at Bill Gates, I look at Steve Jobs, if you look at the early pictures of them in their companies, they look ridiculous. They didn't care what people thought of them. And eventually they hired stylists. Let me show you here, man. So I'm going to show you an early picture of Microsoft that's going to make you chuckle. Okay, early Microsoft picture. Here it is. These dudes here changed the world. hilarious. They don't care. Like even Steve Jobs, when he first started working, before he even started Apple, he'd show up to work and he wouldn't shower for days, and please shower, everybody. And so they made him work the night shift, I think at Activision or Atari for a while. A lot of people that are very successful, they just don't care. Elon Musk, he doesn't care. I mean, he should watch what he says sometimes, but he just doesn't care. It's a very therapeutic way to live your life. The subtle art of not caring what other people think. Okay. And for those of you that are sensitive, and I used to be really sensitive as well, and people, if anybody has kind of criticized you over the years and that hurt your confidence, I want you to think this from now on. This is important. Unjustified criticism is a disguised compliment. Let me say that again. Unjustified criticism is nothing more than a disguised compliment. So in your mind, when somebody criticizes you, I want you to thank them in your mind, because they're so insecure that they're complimenting you. Think about it that way. And you got to process things differently. Like the Rodin sculpture, I think, therefore I am. Process it differently. You're bulletproof. You're Teflon. All right, next up, David wrote, "Hey, Chris, having worked in hedge funds from a banking background, how did you navigate the recruiting process?" Yeah, I networked like crazy. And what I always recommend doing is, as I mentioned before, if you see a job opening, don't apply, because everybody does that. I want you to find a company you want to work at, and I want you to set up informational meetings there. And before these meetings, and before any meeting in your career, I want you to always think to yourself, be preemptive. What drives them? How can I help them? And people are usually motivated by three things. Number one, they want to make more money. Number two, they want to get promoted. Number three, they want to enjoy what they do. So with those three thoughts in mind, when you go to that meeting, I want you to help them either make more money, get promoted, or enjoy what they do. So how can you do this? Well, what you can do is you can actually create a template. And in my MBA program, I give you all the templates you need to bring with you to interviews, regardless of what kind of interview it is. So for example, with this document here, this is dummy data here. But on the back of your resume, when you go to a hedge fund meeting, interview or informational, you print this out. Again, this is dummy data, right? And this is just a one-pager that talks about, I'll show you here, you can print it, even save it as a PDF, a one-page idea. Bring a bunch of these. And the way I train my MBA degree program students is I train them so that when they go into interviews, they have tons of folders with investment ideas and other write-ups for whatever kind of job they're interviewing for. And I tell them when to pull them out in an interview. So you add value. So for example, let's say that you want to work in sales at, I don't know, Hitachi in New York. Well, what I recommend doing is leverage LinkedIn to see if you can find 5 big clients for Hitachi in New York. I know this is a simplistic example. Then when you go to the informational meeting with a salesperson that works at Hitachi, you can say, in preparing for this meeting, I networked a lot and I found 5 people that might be great sales leads for you, and here they are. I know it sounds ridiculous, but who does that? And if you think all that is too much work, I want you to ask yourself, how badly do you want that job or that client? Yeah. Every battle is won before it's been fought. All right. Next up, Luis wrote, "Hi, Chris. One question I have. A call option contract from..." Yeah, it's the same question as before. Yeah. And I read every question. You don't have to post it twice. Yeah. All right. All right, next up, Nitrin Entertainment wrote, "I'd like to leave my job by the end of the year and continue building my DJ business in DC, but my business is in the red." I mean, you're losing money, yeah. "I want to take all of my 401k and 457b to pay down debt and run ads for the business." Yeah. Yeah. Please be careful. So failing to plan is plan to fail. And before you launch a company or scale an existing company, I want you to first write a complete business plan. And I teach that in my MBA degree program. I also have a business class course you can take as well. But again, failing to plan is plan to fail. Yeah. So yeah. And I would never get loans to start a company because banks are chicken. And if you miss one payment, the banks can take your stuff. Instead, I would get high net worth investors to invest. And then eventually venture capital firms. High net worth investors first because the sales cycle is quite short. I've humbly raised and managed over $1 billion. If you want, you can sign up for one of my courses or read that networking book for free on my website. And that will help you in terms of raising capital, etc. But the bottom line is for you, please write a thorough business plan before quitting your job. Yeah. Okay. Next up, Frag Ven wrote, "Hey Chris, I've been experimenting with geometric Brownian motion models to forecast sales at startups. It's been quite promising. Surprisingly, there isn't much literature on this." Yeah, I have no idea what that means. But whenever you're confused about what something means, I'm going to show you exactly what to do. Okay. So what I usually do is I use ChatGPT to explain stuff in simple terms. And you're going to love this analogy. Check this out here. All right. So let's go to ChatGPT. Okay. And I'm going to write this. I am going to paste an options thing that I don't understand. Explain it to me at an 8th grade level. And use a basketball and LeBron James example in less than 50 words. Here it is. Paste. Go. Oh God. Geometric. I'll write here. I'll write here just Brownian options. Okay, here we go. Imagine LeBron James dribbling the basketball in a very unpredictable way, moving randomly in different directions on the court. A Brownian option works similarly. It's a type of financial option where the price moves randomly, like LeBron's dribbling. This randomness makes it tricky to predict where it will go, just like defending against LeBron's unpredictable moves. Okay, I get it. Okay, all right. It's like Monte Carlo simulation. Yeah. Yeah, and in my options course and my MBA program, I teach you Monte Carlo simulation in a lot of ways. I also provide you with many frameworks that include 10,302 cells to calculate any option price using the binomial pricing distribution system. I also teach you Black-Scholes. But I think that the Monte Carlo simulation might be the helpful way to go with that. Yeah. But I still don't know what the hell I'm talking about. But that was fun. Thanks. All right, so moving on to Nelly, who wrote, "Wishing you safe travels and all the best in your work. Thank you. You're making a difference for children, and maybe one day you can help kids in Haiti too. I can't wait to hear about your experience. Je veux faire la grâce matinée. Je t'aime Haiti." Yeah. So my French will finally come in handy in Haiti. Yeah. I love Haiti. Okay. All right. And then, thank you. I will build a school in Haiti. What's your name? Nelly? I'm going to build a school, Nelly, in Haiti, close to where you grew up. I will do it. Now I have to get it done. Yes, I will make one in Haiti as well. Please remind me about it, and I'll do it. And we'll do it we'll start in 2026, Nelly. Keep bothering me about it, and I promise you it will get done. So there you go. I vocalized it. I set a deadline date. It's public. Now I have to get it done. And whenever I come up with a new goal, I love to challenge myself. And this sounds crazy, but it'll kind of explain the DNA sub-fabric of who I am. I feel like I'm standing on the edge of a cliff. And I throw a bunch of airplane parts up. And then I have to jump off the cliff and assemble the airplane before I land. We're going to build a school together in Haiti. All right. And then Mensa wrote, "That was a good one about the CEO moving their lips." Yeah. Yeah, and that's a great laugh of the day you wrote. It's true. CEOs, when they move their lips, that's when they're lying. Just kidding. All right. And then Barath wrote, we're going to get your Excel sheet for stock research template. Yeah. So you can always, it's included in my my MBA program. So you can always go to, just go to learn.harounventures.com. And then it's in these programs here. This is sold out as well. The only one available now is silver. And I'll launch another gold and platinum one in January. Yeah. All right. George, how are you? George is in my Platinum MBA program, start I think in May 6th, right? You wrote, peace and love to all. Great to see you. And George is going to get his book published by December 2nd. Yeah. Great to see you, brother. All right, next up, Frag Ven wrote, Chris, can you please make a YouTube short with your view of not to stress about work that was condensed wisdom that a lot of people need to hear? I hope this live is recorded. Yeah, you can always access a recording of this if you want to. Yeah, I've already done that. So what you can always do is, let's go together to my YouTube channel. Let me go first to my website so I can get the link here to it right here. Yeah. All right. And then what you can do is search my my channel for passion. I've done tons of those over the years. Finding your purpose, Warren Buffett's passion, all that stuff. Yeah, over the years, I've done tons and tons of this stuff. Yeah. Also, there's one where I go in my backyard. Yeah, this is the one I recommend, where I walk around my backyard and I talk about finding your career path and happiness. You know, what hat should you wear? And I walk around. I have to go to work today and run on the field and get paid. Yeah. Well, Chris Haroun is live now. That's cool. I didn't see that. But anyway, check that out if you want to. I just lost about 10 viewers for going off track there. I get real-time feedback, though. All right, let me move on. All right. Manas wrote, did you know that Sam Altman owns a crypto project called WorldCoin where he paid people to get their eyes scanned and store info about what they want to do for 8 billion people? Wow. It's kind of scary. Thank God for European privacy advocates, man. I think that they're keeping American tech companies in check. Yeah, and if it weren't for German privacy advocates, actually, then Google Maps and Apple Maps, the license plates would not be blurred out. Yeah. And Senator of the board said, "Thank you so much," or just donated $10. Thank you. That will go directly to Kenya, to the school we're building there. Appreciate that. You wrote, I'm a new student for your options class in Udemy. Thank you. It was the effing bomb. Thank you. But there's no effing bomb. No, I'm just kidding. Can I use SeekingAlpha for fundamental analysis? Absolutely. Absolutely. And if you want to use SeekingAlpha, there's a discount in the description of this video. I have disclosed before that I am sponsored by SeekingAlpha. You can definitely do that for any stock. You can do fundamental research on any company. You want to, what I love about it actually is you get transcripts as well, right? So when there's quarterly earnings calls, the transcripts are placed here and you can actually listen to a lot of them as well. Yeah. But I'm a big fan of this. I recommend using SeekingAlpha only if you're a beginner, just start with Yahoo Finance. And then when you want to do more advanced research, then I think this is a great place to go to. Again, I proudly partner with them, so I believe in their business model. Thank you for that. All right. All right, next up, Abdulaziz wrote, hey, Chris, thank you for your insightful advice. Thank you. With the rapid growth of AI models, can you recommend a single AI model that would be the most effective for both personal and business development? Yeah. I'd probably use the OpenAI API and just stick with that. It's the most easily accessible out there. And there's so much money behind it as well from the likes of Microsoft, Apple now, a lot of high net worth investors, et cetera, that I think that that's probably going to be the most comprehensive API you can use out there. Yeah. And a lot of times you'll download and use apps that are AI based, and for the most part, the engine they run on, or they use the API, I should say, OpenAI's API. Yeah. Yeah. All right. And then Manas wrote, thank you for everything, my mentor. God bless you and your family forever. And I'll see you all in the next webcast. And then, yes, make Trudeau a drama teacher again. Yeah, thank you. That was a joke of mine from a week or two ago with Justin Trudeau, Prime Minister of Canada. Some people wear red hats saying, make Trudeau a drama teacher again. Yeah. And I went to school with Justin at McGill, and he beat me at something. And I can talk about that if you want me to. But I already told you guys before. All right. All right, next up, Sergio wrote, how much money do I need to call from investors to make a fund worth it and being able to leave my job? Yeah. So what I would do is whatever your base salary is, think of the management fee times 2. So let's say you raise $10 million and you charge a 1% annual management fee, right? That's $100,000. So if you make 50 grand per year, then 10 million might be enough. Yeah. And be conservative, and always know that whenever you're raising capital from investors, at the very last second, they usually cut that order in half. It's just, it is what it is. Yeah. But write that business plan first. Yeah. All right. Center of the board wrote, hey, Chris, give me 1 second. Okay, so it's the same question you asked there as well. Thank you for that. Yeah, God bless you. And thank you again for that $10 donation. Again, that will go directly to the school we're building in Kenya. Thanks. And I don't have charities in my name. So the charity in Rwanda is in Vital's name for Project Magoo. And then Marin, who's my student who I met over Udemy, she's in Kenya. And there's going to be a charity in her name and her father's name as well. Yeah, so I keep that separate always. Yeah, thank you. All right, and Elif wrote, thank you for saying so about Udemy, and thank you so much, really, for your guidance. Your MBA program is truly a treasure. Thank you. Additionally, that's really great what you're doing in Africa. Thank you. And then you wrote, on the other hand, I agree and really love using ChatGPT as well. Thank you. Excellent. All right, guys, I'm going to wrap up this week's call. For those of you in my Silver MBA program, we'll start at about 5 after 10 a.m. today. Again, there's no call next week or the week after that. And for the last 20 minutes or so, I'm going to play a video that will teach you how to start a hedge fund or any company, really. And this is from the television show Billions, where I do a critique of this episode. God bless you all. Thank you all for the well wishes. When I come back from Kenya, I'll share lots of videos and updates and all that stuff. God bless you all. Remember to rest your mind 1 day per week. Love you. God bless you. Thank you.
Get your in my office right now.
You all right?
It was hell. Come bonus time, I am going to show you enough love. I'm going to shove you now. Go ahead. I want you to tell me to go myself. Go to the lounge. Go yourself, Bachelorette.
Let's talk about finance lessons from the 10th episode of Billions, based on my work experience at Goldman Sachs in New York City, and based on my work experience at the top hedge funds in the world. Now, please be sure to like, comment, and subscribe, and stick around, because at the end of this video, I'm going to grade the episode for Wall Street realism with a buy, hold, or sell rating. 3 key topics in this episode that we will discuss are: number 1, tips on how to start your own hedge fund. And in this episode, some of Bobby Axelrod's employees quit to start their own hedge fund, and Axe and Dollar Bill tried to sabotage them.
I heard they went out on their own. You didn't bless that?
I did not bless that.
The second topic is the biggest bribes in hedge fund history, which is what Bobby did in this episode.
40 million. And your final weeks and months, they won't be your own.
The third of 3 topics is about what it's like to date somebody at a hedge fund, and why you should never date somebody at work, except in one situation.
So, Deb.
Don't.
I make stupid money and I'm ready for a relationship.
I make plenty and I'm out of your league.
Topic 1. Axe finds out that his employees have started their own hedge fund.
Talk.
So, Ionosphere Fund. They set up shop downtown.
How much?
200 million under management, 40 of it's theirs.
Where's it coming from? They stole this. Some of these people are ours.
Now, Bobby has 3 choices. He can either, number 1, sue the fund, as the former employees signed an NDA and they can't go after his investors. Or number 2, he can invest in them. Or 3, he can destroy them. It's Axe, so we know he wants to end them. But he first tries by attempting to convince investors in the new fund to cancel their investments.
First money in, I got very favorable terms, and I don't see a reason to give that up.
Do this for me, and I'll cut your fees to 1 in 10 over the next 3 quarters.
Accurate. This first investor got a sweetheart of a deal, as she is the first investor in the fund, so she likely pays very low fees and potentially owns part of the management company. And Axe tries to convince the second investor here by offering him reduced fees in Axe Capital by paying 1 in 10 instead of Axe's fees of 3 in 30. So what 1 in 10 means is Axe will let the investor only pay a 1% annual management fee and a 10% incentive fee. For example, if this investor invested $100 million in Axe Capital, then he'd only pay a 1% annual management fee, meaning $1 million. And if Axe Capital makes money, the investor will only pay a 10% fee. For example, if the investor's $100 million doubles, then he would only pay a 10% incentive fee, meaning $10 million of the $100 million increase in his account in Axe Capital. And although the going rate for hedge funds is a fee structure of 2 and 20%, startup hedge funds often charge closer to 1% and 20% in order to entice new investors at launch. Also, very large early investors often get part of the management company, meaning they might own 25% of the hedge fund so they can make money on fees. And we'll get back to how Axe and Dollar Bill sabotages the hedge fund startup in a second. But first, here are 10 tips on how to start a hedge fund. And many of these tips will help you starting any startup. Number 1, you need to show investors a track record of performance by either working at another hedge fund or by managing your own money in an audited account. Tip number 2, if you don't have a long track record, then don't waste your time talking to very big institutional investors like pension funds or endowments. Why? Because you will get meetings, but they won't invest in you until you've been running your fund for a couple of years at least. So who should you meet with then? Well, when you start any company, you want to meet with high net worth investors because the sales cycle is shorter. And always talk to the decision maker, meaning the wealthy person with the capital. You got nothing to lose. So how do you even get meetings with high net worth investors though? Well, step number 1 is have an incredible LinkedIn profile, which I teach in my MBA programs and consulting services. Step 2, do an advanced search in LinkedIn and find at least 2 things you have in common with this person, because relationships are often more important than product knowledge. Step 3, send an in-mail and not an email to this person because you've read every single in-mail that you've ever received. And I want you to type this in the in-mail, for example. John, hope all is well. I also went to the Toronto French School, and I also live in the Bay Area. Please let me know if you have time for a coffee. Thank you, Chris. And never write why you want to meet, or they won't respond. Now, one meeting can change your life, and you might be thinking, hey, why would they ever take a meeting with me? Well, close your eyes and imagine this, please. In 20 years, you're way more successful than you already are today. And if somebody 20 years younger than you that reminds you of yourself asks for a meeting, would you take that meeting? Of course you would. Open your eyes now. Remember, closed mouths don't get fed. Now that you have the meeting set up, what do you do next? Well, step 4 in the meeting is you want to bond before business. And you always want to bond in the first 10 minutes of a meeting and talk about what you have in common, or better yet, what you can do is this. You can go to their X or Instagram profile and see who they follow. You know, if they follow baseball players, what you can do is you can talk about baseball because sports is great boardroom talk. All right, step 5. In the meeting, what you want to do is pivot about your hedge fund and pull out your investor slides. And regardless of what company you start, your slides should only be 10 to 12 slides and no more than 3 bullet points per slide. And what you should do is use the Airbnb pitch deck template as it works. And as you can see, they use images, and about 3 bullet points or images max per slide. And in addition to talking about your performance metrics, in the slides, you want to mention risk management metrics that you adhere to. For example, you focus on capital preservation, as you run market neutral, which many hedge funds do. Meaning, you won't be more than 10% long or short in your portfolio. Now, other risk management metrics that you can mention is no position will be more than 5% of capital, and that you have stop losses, and you will not have more than 20% of capital in any one sector, like healthcare stocks, for example. And you'll only invest in liquid stocks, which we talked about in episode 9 video, which you can access in the description of this video. Now, in your slides, you want to show your infrastructure too, like who is your prime broker, your custodian, your auditor, your employers, and other service providers, including your lawyer. Tip number 3, never raise capital without getting a lawyer to register your company name. And your lawyer will also review your slides and create an investment offering memorandum that details all the risks so that you're protected and your investors are protected too. And never invest in anything unless you get an investment offering memorandum, like this Facebook IPO S1 investment offering memorandum from 2012. Now, the lawyer is also going to create subscription documents, which all hedge fund investors must complete. Now, these sub-docs are 10 to 20 pages, and they ensure that the investor is accredited, meaning they have a certain liquid net worth, and there are AML, or anti-money laundering rules and provisions post 9/11 that are also included in the subscription documents questionnaire. And the lawyer will also make sure that you're compliant with FINRA and that you take the appropriate securities exams. Tip number 4, show investors that you have a process for picking stocks. Now, I've humbly raised and managed over $1 billion, and I'm going to show you what worked for me when I started my hedge fund and venture capital firms. I love teaching much more than investing, and building schools is what I do with my profits. We just finished our first school in Rwanda, and we're building our next one now in Kenya, and I'm going to build 1,000 schools in total. So here's my investment process. And I used to bring something like this to my investor meetings, which I now give to my MBA program students and clients. And I have a 100-step research process, as you can see here, where I analyze qualitative research steps, quantitative research steps, and then financial model steps in this spreadsheet where you answer more than 700 questions. And you can create your financial model from scratch using this document. And you want to show investors this during your meetings, or at least have it handy in case they ask about your financial model, which you can pull out. Now, the outputs from this document are as follows. Number 1, a dashboard, and this is all using dummy data here. The second output is a 100+ page thorough investment research report. And the third output is a 1-page write-up, like an executive summary, that highlights the fundamentals, valuation, and technical analysis, all based on the questions you answer in this spreadsheet. And you can print out this 1-pager and even put it on the back of your resume if you're interviewing to work at a hedge fund. And each tab has a YouTube video explaining each of the 100 steps. Tip number 5, don't just focus on US investors, go global. How? Through your lawyer, set up an offshore bank in BVI, meaning British Virgin Islands, and not the Cayman Islands, as BVI is cheaper. And your offshore bank is where international investors want to invest, so they're not subject to US taxes, but never give tax advice though. And the process of having an onshore vehicle for domestic investors and an offshore vehicle for international investors is called a master feeder structure, as the offshore bank and the onshore fund feed into your management company, which is often an LLC, meaning limited liability corporation. And your lawyer might also tell you that you can bill your legal fees to your investors over 60 months, meaning 5 years. Tip number 6. What if you don't have enough savings to start your hedge fund? Well, as we saw with this investor here, you can offer a sweetheart of a deal to your first large investor and give them 25% of your management company, meaning your LLC. And in return, they can pay your salary and your team's salaries and other expenses as well. Tip number 7. It is so competitive to start a hedge fund. So you might have to offer lower fees when you first get started, like 1 in 10 or 1.5 in 20. Tip number 8. Failing to plan is planning to fail. So please make sure that you write a thorough business plan before you start any company, and I have templates for that as well. Tip number 9. Be controversial but tasteful so you get free media attention and you're interviewed by top publications. Now, have you ever seen a Tesla commercial? Neither have I. Now, investors like Cathie Woods and other financial experts have gotten a lot of free publicity by leveraging the media, which means fund inflows. Even Sir Richard Branson was controversial when he drove his tank through Times Square when he declared war on Coca-Cola with his Virgin Cola product. And Mark Benioff, who founded Salesforce.com, got so much free media attention because he was controversial. And he said that traditional software is dead and cloud computing is the future when he launched Salesforce back in 1999. Lastly, tip number 10. You need to develop superb sales and presentation skills to raise capital, like we discussed in my recap of Season 1, Episode 6, when we discussed how Bobby and Warren Buffett communicate. Hold on a second. You might be thinking, yeah, right, Chris. How am I going to get media attention? Well, here's how. I want you to write one article per week on investing or whatever you're passionate about and put it on LinkedIn. Then after 1 to 2 years, what I want you to do is this. I want you to take your articles and then I want you to put them together in a book that you're going to self-publish yourself like I did. In fact, here's the link to download this 6-inch by 9-inch template for the book for free, which includes 1 page of instructions. Really, really easy to do. So what chapters do you put first in your book? Well, the ones that got the most views on LinkedIn. Then I want you to bring this book to your investor meetings or any networking meeting. And if you think that this is too much work, then I want you to please ask yourself, and I say this with love in my heart, how badly do you want that job or that investor? Now, it's a marathon and not a sprint. And please don't give up after writing a couple of articles, because your competition will. And as Warren Buffett said, the longer the view, the wiser the intention. Oh my God, I talk a lot. Okay, back to Bobby Axelrod and the cabal of employees that quit to start their own firm. So Bobby could not convince the investors to pull the plug on funding the startup. So what he does is he goes to plan B by getting Dollar Bill to cooperate and help him out by going after the employees that left Axe Capital.
I'm gonna give Channing, Carly, and Plaza a good.
I heard they went out on their own. You didn't bless that?
I did not bless that.
That's a shame. They were talented, and I kind of like them.
So you don't want to help me out?
That they you, they me.
Not accurate, but so entertaining. Now, hedge fund billionaires and billionaires in general are often unemotional, which is why they're successful. Although their spouses do complain about them being unemotional. I'll come back to that in a minute. And if you're unemotional in business, then you'll be incredibly successful. And as Warren Buffett said, you want to be greedy when others are fearful and fearful when others are greedy. In fact, if you're a contrarian in business, you'll be much more successful. As Buffett also said, the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Now, Axe is really, really upset because this startup is killing it out of the gates.
$4 million rip on DKA, up 2% in our first week. There are tips, and there are tips.
So how is Dollar Bill going to destroy this startup? Well, he's going to use information warfare.
You know how Penn Consol's been rising on takeover rumors?
I've been watching that.
Behind the scenes, there's a bidding war. It is on. Sure? I am not uncertain.
Now, the insider information that he gave was wrong, so his unethical information is unethical.
28% of our fund by the time we dug ourselves out of the position.
Was there ever even a real takeover being considered?
Who cares? It's over.
So this hedge fund is done, also due to poor risk management. I mean, never make a position more than 5% of capital. Now, in comes Bobby the Vulture.
Here's what I'm prepared to do. We will enter into a revenue share agreement. The current rate for seed money is 20 to 25%, so why don't we call it 40?
40?
Swallow that.
Now, earlier I mentioned selling 25% of the management company when starting a fund in order to get cash flow to pay the bills. Now, Axe gets 40% of the management company here. This means that if the fund charges 2 and 20, Axe gets 40% of the 2 and 20.
You will provide total transparency. I want your trade file sent to my office every night.
Accurate. Only because billionaire hedge fund managers invest in many hedge fund startups as a way to get information on their trades. It gets worse though.
There will be a limit on how much outside capital you can raise. At no time can you manage more than $999 million.
Now, having $1 billion or more in assets is prestigious, like owning a restaurant or a vineyard for hedge fund managers. So keeping them at under 1 billion assets is a tough blow for this startup. But wait, there's much more.
There will be no buyout to eliminate the revenue share agreement and no lockup on my money. I can pull the plug at any time.
Brutal. He's relentless, like a pit bull on a pork chop. Now, what he means by no lockup on his money is that hedge funds usually require advance notice of at least 30 days before you can redeem your money as an investor. Why at least 30 days? So you don't drag down the value of your longs and vice versa with shorts, assuming that you're only investing in very liquid securities. And as we discussed in season 1, episode 9, illiquid stocks own you in a down market rather than vice versa. Topic 2, hedge fund bribes. Bobby bribes an employee that has a terminal illness.
How are you?
Can I say it's nothing?
Cancer. 40 million. It won't be simple. It'll require deception. And your final weeks and months, they won't be your own.
Are we talking about breaking the law?
So Bobby bribes portfolio manager Donnie with $40 million. And if Donnie uses insider information, he won't be around to testify. Now, let's talk about real stories of hedge funds and bribes. Per this press release here from the Department of Justice, in late 2016, hedge fund Accenture, which has over $30 billion in assets under management, was caught bribing government officials in 4 African countries in order to profit from diamond and mineral mining contracts. And the government fined Accenture $213 million. And the PR or publicity was so bad that Accenture changed their name in 2019 to Sculptor Capital Management. Now, in my episode 7 recap, we discussed vacation homes of Wall Street billionaires, including Accenture founder Danny Och's vacation home. Other examples of bribes was with Raj Rotman's Galleon hedge fund. In 2009, the FBI arrested Raj for bribing employees with bags of money at large firms like Intel and IBM. He even got insider information from his good friend, Rajat Gupta, who was the CEO of McKinsey. And Gupta would leave board meetings of massive publicly traded companies and then call his buddy Raj with insider information tips. Now, both men served time in jail, but McKinsey, as usual, didn't really get in trouble. And Gupta was also the CEO of McKinsey in the early 2000s when McKinsey advised Enron. McKinsey also did not get into trouble back then. Now, you might be wondering, why do these billionaires bribe people and break the law when they're already billionaires? Because likely they became billionaires by breaking the law for decades. And it gets worse with Raj, because Raj Rotman, when he was in jail, he also got caught bribing a prison counselor with $90,000 to get favorable treatment. You know, once a cheater, always a cheater. And other examples of hedge fund bribes include Bernard Madoff, who ran a massive Ponzi scheme and was arrested, and he's serving jail time now of 150 years. But I gotta be honest here, I always knew he was a criminal because, you know, his name is Madoff, because, you know, he made off. Sorry. All right, quick side note though. One of the people that lost money as a Madoff client was John Malkovich, which might explain why Malkovich decided to brilliantly play the role of corrupt billionaire hedge fund investor Grigor Andolov in season 3. And if you work in finance, there's so many laws and rules about spending no more than $100 wining and dining clients. So to get around this, many people in finance use their own cash and not a corporate credit card when entertaining clients, which is another form of a bribe and is certainly unethical. Topic 3, dating at hedge funds.
So Deb.
Don't.
I make stupid money and I'm ready for a relationship.
I make plenty and I'm out of your league.
If you have dinner with me, I'll buy you a Mini Cooper.
All right, look, I tried that Mini Cooper line so many times and it never worked for me. Kidding, of course. So dating anyone at work is a recipe for disaster and can be a massive distraction too. Now, the only exception, in my humble opinion, is if you found your soulmate. Otherwise, it's deadly, as one or both of you will end up potentially destroying your career. It's just not worth it. And most companies make you report any relationships that you have to human resources. And affairs occur a lot as well. And I don't think you can ever trust anybody that cheats on their spouse, as they'll likely cheat on you in business. And MBA stands for married but available, or it doesn't stand for married but available. My humor is awful. Okay, I'm going to stop right now. All right, so what is it like to date somebody that works at a hedge fund? Well, if they're really good at what they do, they might be unemotional, which could be an issue in a relationship. Also, if you date somebody that works at a hedge fund, be prepared to not see them much, a couple of weeks, 4 times per year, because companies report earnings 4 times per year, quarterly. And during earnings season, which often lasts 2 weeks, hedge fund employees work very long hours listening to earnings calls, usually after the market closes at 4 p.m. New York time. Then they spend hours that night updating their financial models to come up with a new target price on their investment. Quick side note, if a company misses earnings by, let's say, 20%, then what happens is when you update your financial model, often your new target price is 20% lower, assuming that you use the same PE multiple for your target price if you use PE. Therefore, the stock usually drops after hours by 20% and vice versa if the company beats earnings. Now, of course, financial analysts update their models based on what the guidance is for the next quarter and current fiscal year if the company provides guidance. But have you ever noticed or seen a company beat earnings and the stock gets crushed, AMC, meaning after the market closes? Well, one reason this might occur is because analysts also look closely at what is called deferred revenue from the liability section of the balance sheet. And when a company gets cash for a product that they sold, but they haven't given that product yet to customers, then by law, it cannot be classified as revenue in the current quarter. Therefore, that revenue goes into what's called deferred revenue in the liability section of a balance sheet. And this is part of what's called bookings, meaning revenue from the current income statement, plus the change in deferred revenue from the current versus previous balance sheet. So if bookings gets worse, then it means that the company might have only done well in the quarter they just reported because they drain the pipeline of business opportunities. So please monitor deferred revenue closely when you build your financial models. Okay, let's get back to dating at hedge funds. If you work at a hedge fund not based in a financial center like New York, then please be prepared to travel a lot to attend conferences, investor analyst events, etc., which can be tough on relationships. Let's talk about grading this episode for Wall Street Realism with a buy, hold, or sell rating. The episode did a great job of explaining the seed investing and fee structures of startup hedge funds. It also did a good job of explaining how and why billionaires often invest in hedge fund startups as a way to get information on trades. However, there's no way that portfolio managers like Dollar Bill would give unethical insider information that is wrong to another fund. This does not happen. Also, there's no way that Bobby's sidekick, Wags here, would find out exactly who the investors are in a hedge fund startup. Separately, bribes occur at a lot of corrupt hedge funds, which of course is the minority of hedge funds. But bribing someone who is about to pass away from a terminal illness is so cold. And although the writing is superb in this episode, that seems a little bit far-fetched. As a result, as much as I enjoy this episode, as the writing and plot were superb, I'm going to give this episode a sell rating. Please like, comment, and subscribe, and I'll see you soon in our next reaction video when we react to episode 11. Thank you.